Imagine you're building wealth in India today. You've done your basics, FTs, SIPs, maybe even some index funds. You've played safe, you've been disciplined, and it's worked. But now you're thinking, is there something beyond the usual, beyond just long term compounding, something more flexible, more strategic, yet not only for the ultra rich? This year, SEBI finally opened that door. On one side, we have mutual funds, regulated, reliable, great for beginners and long term portfolios. But then they can feel constrained, long only, mostly traditional strategies. On the other side, we have alternative investment funds or AIFs, flexible, head style, sophisticated. But the entry ticket, 1 crore, that keeps most investors out. For years in India, there was no middle path until now. In April, SEBI introduced a new category, Specialized Investment Funds, SIFs. Think of SIFs as a bridge, the regulatory comfort of mutual funds, the strategic flexibility of AIFs. Minimum investment 10 lakh. Not small, but far more accessible than 1 crore. Unlike mutual funds, SIFs can use advanced strategies. Take long positions, bet on winners, take short positions, hedge or profit if something falls, use derivatives, allocate across multiple assets. Imagine a strategy that shifts between banking, IT, and defense dynamically. A debt fund that hedges credit risk and enhances yield. A multi asset fund blending equity, debt, REITs, INVITs, and commodities. It's the first time Indian investors can access hedge style investing without hedge fund money. Markets evolve when investors evolve. Over the last 5 years, AIF commitments grew at 30% CAGR. Mutual fund AUM grew at 24% CAGR. Wealth is rising. Interest in sophisticated strategies is rising. Investors want more flexibility with transparency. SEBI's message will allow innovation but with rules and guardrails. So, what makes SIFs powerful? Access 10 lakh instead of 1 crore. Transparency, regular disclosure, risk reporting, capital gains taxed at redemption like mutual funds, strategy flexibility, long short, multi asset, risk cap, unhedged shorts capped at 25%. This isn't about removing risk, it's about giving well informed investors more control responsibly. SIFs are not your first investment product. If mutual funds are a treadmill and AIFs are Formula One, SIFs are a superbike, exciting, powerful, and demanding skill. So ask, do I understand markets beyond basics? Have I built my core portfolio? Am I prepared for market cycles and volatility? If you're still starting out, SIPs, debt funds, and index funds are your foundation. If you have graduated from basics and want tactical exposure, this may be worth exploring. The industry is excited, funds are applying for approvals, investment teams are being built, playbooks are being designed. Globally, hedge-like products emerge when markets mature. With SIFs, India signals we are ready for sophisticated investing. This isn't just a product shift, it's a market evolution milestone. Ask yourself, if you're a beginner, focus on basics, automate SIPs, understand risk first. If you're an evolving investor with capital and curiosity, SIFs can be a powerful diversification tool. If you're an HNI, experienced investor, this brings hedge style strategies into the regulated public market universe. SIFs are a scalpel, not a hammer, designed for precision, not casual investing. SIFs represent more than a new fund category. They represent India entering its next investment era, moving from standard choices to strategy-driven allocation. And as investing evolves, our mission remains the same: to help you stay informed, make smarter decisions, and build wealth with confidence. This is Beyond Yield, where we simplify complex markets and bring the future of investing to you. Until next time, invest better, stay curious, and go beyond yield. Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risk, including delay and/or default in payment. Read all the offer-related documents carefully.